Welcome to Beyond the Expert, a production of AGORACOM in which we speak with small cap investors and experts about what they're seeing in the markets. Today, we welcome back venture capitalist Leigh Hughes. Most of you know us for Beyond the Press Release, where we tell the stories from the side of small cap companies, but Beyond the Expert tells these stories from the perspective of experts in the small cap space. And given his great track record and recent big success of many over the last 12, 18 months, we couldn't think of anyone better to start off investing season than Leigh Hughes, who we've had on before. For those of you who are seeing Leigh for the first time, he's a venture capitalist who I've personally watched conduct incredible due diligence to discover and invest in almost unknown small cap companies that have generated some pretty incredible returns over the last 12 to 18 months. Leigh is so good at what he does that many global private equity funds and institutions will not only take his call, but they'll oftentimes follow him into investments that he chooses to make. Moreover, he serves as an advisor to several small cap companies. So if you ever want to truly learn about how to become a great small cap investor, it doesn't get much better than this. Leigh, after a long summer, welcome back, my friend.
Thanks, mate. Appreciate you having me on.
All right, summer, we're past summer, not the official season, but you know, the unofficial Labor Day and all that. And I want to talk to you about the small cap summer that we had, investing season that's now begun, and some of your favorite spaces and companies. But let's talk about the summer. It was a bit of a tough one. Why do you think the summer was so tough on small caps after we had a screaming Q1?
Well, I know that we've spoken about a few theories, but I think more importantly, I think community needed a break, George. Last year and probably Q4 of the year before, the banking hubs were forced to work. I guess they were forced to change. They were stuck in their homes. They weren't able to actually go and take their families for a break. I really found that, once summer came and it gave the banking community to, I guess for the market to reopen, to understand that they can all go and have a holiday and actually take their families and actually take a very well-earned break. Yeah, me too. So, I guess people were sort of saying, what's going on in summer? We were all spoiled last year in summer. The market never really changed. Sell in May, go away, didn't really happen. Financings continued. Businesses started to grow. They were marketing their businesses. This year, I think people just wanted to close the laptops and turn the computers off and go to their summer cabins and dust off the shelves that they couldn't do last year and go and get a break. I was lucky enough to be in a couple of weeks ago, and people still weren't back. Labor Day just ended. People are obviously starting to come back now, but I was actually quite buoyant when I went to Toronto too, because I didn't really know what to expect. But those that were back were really, I guess, refreshed and re-energized, and were really buoyant about, the back half of this year actually being, another ripper like it was last year, and, financings to continue to, help build these companies and obviously market and see things grow. But, death by 1,000 cuts for some of the small caps, I think, over summer. But, low volumes, you saw low volumes. Companies were still trying to market themselves and push press releases out. But I think, we just didn't experience the summer that we experienced last year because we were so spoiled. But I mean, there's a couple of theories, but you hit the nail on the head there. I think people were burnt out, they were tired, and they wanted to enjoy the summer.
Yeah, I took 17 days off, and I normally don't take that long. I took 17 days off because we had been going, and I'm sure you're the same way, full blast since Q1, and then COVID, and then right through the summer, right through Q4, unbelievable Q1, pretty good Q2. And then I think everyone started burning out and saying, I need some time off because I can't keep going like this. So do you agree that it's more of a short-term issue and not a long-term structural problem?
Look, I think so. But again, there's still that instability and volatility in, a lot of if you want to look at macroeconomics globally, there's still a lot of, like I said, instability and volatility, and you can go down a rabbit hole in a number of different aspects if you wanted to talk that side of it. But like I said, I think the pain was temporary, and I can see that the real companies are now starting to get to work. One of the things I will say too is that, you know, companies also need to be able to take a bit of a breather. You know, the CEOs, directors, management, C-level management, they've been working their butts off, a lot of these companies, and you sometimes need to give them a little bit of a leg rope to actually get some time for themselves with their families and whatnot too. So, and at the end of the day too, I think it also allows the companies to actually, you know, get granular internally and work on their strategies and reflect back versus constantly pressing. I know some of the companies that I've been fortunate enough to be able to work intimately with have really focused on the last 3 to 4 months of just building their businesses and looking at what 2022 and 2023 looks like strategically. You know, they're reflecting back onto their visions and also just personnel. And you know, I think it's a healthy balance that we need to respect for these small cap companies that don't have the luxury of having these endless pots of gold, i.e. cash or capital, to be able to build their company. So I think as investors, we've been, like I said, I think we've been very, very, very fortunate and spoiled for what we've seen in the last 18 to 24 months. And you know, I think respectfully, we just need to make sure that we sit back and allow the businesses to do what they need to do.
Devil's advocate. One factor, and I don't know if there's a correlation. That's why you're the expert. NFTs, crypto were scalding hot this summer. Unbelievable. I know from my own kids, all that, who have made unbelievable amounts of money. Any chance that we're seeing a bit of a structural shift where young people may be leaving small cap markets for the fast moving NFT crypto world?
Yeah, well, they're two sectors that I'm not necessarily very educated in, to be honest with you, especially crypto. But you know, certainly from afar, I'm seeing some of these things just do crazy moonshots, if you want to call it, in such a short period of time. And you could be exactly right there, George. You know, if you look at how Robinhood really changed the way we're trading and you know, access to be able to invest in some of these companies. You know, a lot of them are kids. A lot of these kids have the access now. So I think you probably are right. And like I said, I think respectfully, we just need to take a step back and look at what is a healthy mix of, you know, allowing these small cap companies to actually be able to build their businesses with a little bit less of a hype train attached to them or expectation. But I think you could be right. NFTs, I mean, wow, some of these companies, and I mean, I think I saw something last week where someone bought a pet rock or something, and sold it the next day for 10 times their money. And I'm just like, wow, okay.
10 times nothing, man. I've seen 70, 100, 200
there you go.
with massive volume. But listen, it's a small competition, but I just want to kind of bring that up but let's talk about the fact that investing season has now begun. And for me, investing season is always the first Monday after Labor Day. Why? Labor Day comes on a Monday, everyone's back. Kids are starting school on Tuesday. Everyone's getting settled in. So even that week, even though everyone's home, is still a little bit jumbled up. But you know, here we are. This is the first week of first true investing week for investing season. What do you see in the next 8 to 9 months until, you know, May, June comes around? Do you have a thesis that you're starting to create, or are you still forming it?
Well, I guess I'll reflect back to, you know, being able to be in Toronto a couple of weeks ago. I'm in Montreal at the moment, and I think there's certainly smart capital to be deployed. I got to meet a lot of Bay Street after not being able to be there for 2 years. Of course, we've all been, you know, stuck in our provinces, and I was amazed how many deals are going across the desk and actually getting financed from the mining space to obviously disruptive tech. Biotech still has a plethora of interest. I mean, fintech's been great. We're seeing a lot of businesses mature and look at upping down onto the NASDAQ in the US, as an example. I think smart money will continue to be deployed. Interestingly, we saw even quite some significant M&A activity occur over the summer. This sports betting and gaming and esports space has really started to capture the attention of major money institutions, private equity. We saw the score. Yeah, you took the words out of my mouth there. So, like I said, I think smart money is still there to be deployed. You're going to see some risk capital also, I think, continue to be deployed. But some of those businesses that have really hit their milestones over the last 12 months, I think will still be able to go to the marketplace and raise capital. And that's just from what I'm hearing. But I think, some of the businesses that might not necessarily have hit the mark, or if you lift up the hood and there might not be as much in there, I think will be a little bit of a struggle, or they might need to be a little bit more patient as well, and maybe build their businesses a little bit differently. But like I said, I think for sure there's smart money to be deployed. There was some significant financings that took place over the summer, George, as well going into the summer. And I'm sure you've seen that as well. So, of
course,
I think it's a pretty exciting Q3 and Q4.
So, speaking of sectors, because you're touching on a couple there, what are the sectors that you like? And okay, the first one, let's talk about that. Sounds like iGaming, which is online gambling, esports, which has a connection. That sounds like one sector. Let's talk about that sector and maybe what you like in there.
Yeah, well, the Score acquisition in summer, I think, was exactly what the pointy end of the smart money was looking for. They're looking at an acquisition like that, institutionally for sure, and even in the private world. That acquisition was significant. That really did give, I think, credibility to these businesses that aren't necessarily making, big revenue numbers, and they're more focused on consumer acquisition. A little bit like what Facebook was when it very first started. It was all about just eyeballs, connect points with those eyeballs. Score has a lot of those and got bought for a few $1 billion. So I think that really did give the sector some credibility, and in particular between Canada and the US as well. I think that shows that there's deals that can be done. I think it
also shows, Leigh, that it's no longer a space just dominated by Caesars, Wynn, Sands, and all the traditional guys. I think that busted open the concept of, holy smokes, this online iGaming gambling market is going to grow exponential, and there's a lot of room for smaller, smart, nimble players, right?
I agree. And, like I've said this before, Canada is just fantastic for incubating new spaces. The esports iGaming here in Canada, you could argue, is clearly a disruptive space. Canada is amazing at being first. You talk about cannabis, you talk about blockchain. Cannabis, has been a space that Canada really did dominate early on. But if you look at it now, you've got Canadian and US companies coming together. They're doing deals. It's taken a long time for that to occur, but it didn't take very long for that to occur in this space. When you think about iGaming, sports betting, that Score deal was serious, and it hasn't really matured as a space or a sector yet. So I think that's a really interesting space. I think that's one worth following closely. I certainly am. I've been over the summer really trying to sort of wrap my head around the how do you really monetize these different companies and the assets that they control, and then obviously value them, and to then see some institutions get involved, and then you really start to see the smart analysts rip apart and put them back together. Now that they have a little bit of quantum to work with, I think is awesome. For Canada, you've seen Fans Unite, in tema
Solutions. Full
solutions.
disclosure.
Yeah,
Love that company because they
Tema
got a
Solutions.
B2B and a B2C side. They got a UK licensing. They're hitting it out of the park.
Great. Yeah,
and in
there's, what is it? Luckbox. You've got Fans Unite. You've got Intema Solutions, and full disclosure as well. I'm an advisor to those guys, and I think they're going to do exceptionally well. But then, you're going to see there's a few private ones coming that are going to be coming public soon, which I'm watching pretty closely. I think there's Wonder Gaming, who are sort of capturing the NFT side of things and stuff. So there are some really interesting Canadian names that I think will hopefully disrupt a little bit more and make that space a little bit more of an investor's paradise for gains moving forward. But of course, most of those names, as we all know, were hit by that death by 1,000 cuts summer that we've just had as well. So if you think about it, there might be some good buying opportunities there to, when these companies do go and promote themselves and start raising a little bit of money and actually getting real deals done to be a good name or a good pick for some investors to get involved in.
Let's talk a little bit about Intema, if you can. Stock is halted because they're in the middle of a major acquisition. What, if anything, are you able to tell us about how things are going at Intema as they wait for the acquisition to close, and then because it's such a big acquisition, the venture said, let's halt the stock, get the acquisition done, and then move forward.
Yeah, well, I mean, again, full disclosure, I'm a board advisor to the team there, and I'm sitting in Montreal at the moment and have been able to spend some really good quality time with management, with C-level management. Again, I mean, those guys have just been, their bums have been on the seats all summer. They've been working their butts off. This Loop.bet acquisition, the more I learn about it, the more I understand it, is a serious acquisition. Heading handle of $90+ million with an NGR of $5 million already in the tank, and 5 years of financials. I mean, that gets me pretty excited because it actually starts to give some credibility to the numbers and the fundamental side of what they've been able to work on. I mean, I know that they're going through the pointy end of due diligence now on that acquisition, which I'm sure Laurent Penezra, the CEO, has probably told you as well. And also the pointy end of the financing. They just closed their first tranche. Now that the banking community is awake and back to work, I know that there's been some pretty interesting connect points there between the financing and that community. So, I mean, I can't really step over the mark, and I hate jumping on anyone's parade, especially management.
But good to get an update.
Look, one thing I will say is that I think that business is again going to give the space in Canada some really good fundamental metrics to measure the space on. And I mean, I've been really, really fortunate to have seen these guys in action. I mean, look at their board that they've been appointing. I mean, it is pretty impressive. So I think Q3, Q4 for Intema is going to be a pretty exciting time. And 2022 is a completely different ballgame. Again, if you have a look at their decks on their website, if you have a look at what they're estimating for 2022, which I think I can be quite confident to say that estimation is real because they've got real numbers. If you start looking at valuations and peers and comparables and whatnot, let the investor community do their work. But it could be a good one for people to look at.
We couldn't have a conversation without talking about peak fintech. And you and your partner Marty discovered the company at 2 cents. And I know that's before it went through a bit of a reverse split or whatever the case was back then. But you discovered it, you did your due diligence, you backed it, you put your money where your mouth was, and no one else was even looking at it. And less than a week ago, they uplisted the NASDAQ. First of all, how great does it feel to have a thesis come through like that? And what other, what else are you looking for out of peak fintech now that it's cashed up on the NASDAQ and just making acquisitions? It's where do you see the next 2 or 3 years? Because I know people like to look at tick by tick, but guys like you and I, we like to look over the next 2-3 years. I'm not talking about stock price, but I'm just talking about how that company's going to evolve.
Look at their forward guidance. I mean, their forward guidance in their numbers for 2022 to 2024 or 5, I think their numbers have come out for from a forward guidance standpoint, are at a whole nother level. You know, when I first met with the team at late Q1 last year, they were a bit stranded. They were a little bit stuck in the mud, as we like to say in Australia, and they needed a little bit of love. And I think they needed to sort of clean slate their investor base at the time. I know some of not all the investors probably ran for cover and exited the station. Some of those that stayed, I mean, you know, amazing to them and well done. I think the term is diamond hands here in Canada, isn't it? That's sort of come through. So some of those with diamond hands have done exceptionally well. But look, you know, I will say that when I first met with the CEO, you know, when I did, his vision was extremely aggressive. Of course, COVID hit, and then of course the communication between Canada and China, which is obviously where most of their ops is, became a challenge. So, you know, he was sitting in his office in COVID. So was I. You could hardly travel. I think there was 5 people in the plane when I traveled. You know, and we were sitting from afar, and he was showing me the numbers, and it literally was. It looked like it was too good to be true. And when you're sort of coming in there as a fresh eyes, you know, fintech for me being, you know, growing up in Australia and cutting some of my corporate cloth there is quite close to Asia. So I had some tools and resources available that I could lean on when, you know, constructing some due diligence, you know, of guys that were covering Ant out of Singapore at the time, and knew China very, very well. And, you know, in the eyes of them, having a look from afar, they were like, listen, like the regulatory environment in China is becoming a little bit more favorable for, you know, the SM side of the business world down in China. And, you know, I think it was, you know, it was a 2-cent stock, rolled it forward to 20, and then we did the financing. You know, it was a very cheap stock in their eyes. You know, look, take a little bit of a punt, but I'm going to tell you, I mean, full disclosure, not in my eyes did I see that it was going to perform the way it did. It's a testament to the management,
because it's unbelievable how fast that business
testament to management. I mean, management have really executed, I mean, over delivered for shareholders, and I'm sure themselves as well. I know that management is very chuffed with how they've gone. But, you know, NASDAQ is a different beast. They're talking about Hong Kong as well, I believe, as well as a market for listing. And, you know, they're going to have to continue to execute. They've sort of opened up their Kimura for investors, but also for, you know, analysts to get technical with them too. So, you know, I don't think they underestimate the challenge that they have ahead, but I really do feel that when they start actually now, I mean, they've just become profitable. They've just over exceeded their last quarter. I mean, you've seen the numbers by a long way. If they can continue to do that for their next quarter and their quarter after, I mean, I don't think you really need to be a rocket scientist to see that maybe where it's at right now is still got room to move. So, you know, best of luck to everyone that's invested in the company, that is along for the ride, and also to management. So, you know, there are a lot of diamond in the roughs here in Canada. I certainly have seen that. You know, you cover a lot of other names that have done just amazing in terms of growth in a short period of time. And, you know, let's hope we see some more of that.
Before we cut out, any names that you think we should start taking a look at home, doing due diligence? Again, you're not giving financial advice, you're not giving a buy recommendation, but or are you still kind of pruning that list because you're back? You want to see who's been beat up, who's a great business, and where the value is, or do you have a couple of names that you like?
You know, not necessarily individual names, but certainly going into trying to really, you know, pull apart and put back together the biotech space. Canada's got some, like I said, I think Canada's been able to really open up the biotech space because of COVID over the last 18 to 24 months. Shareholders have got a little bit more sophisticated, companies have got access to capital. And I would be very surprised if we don't see some good runners come in Q3, Q4. I've been able to have a look at some pretty interesting private plays in that category, which I'm sure we can talk about soon. But you know, I was actually fortunate enough to have a chat with the CEO of one of your other clients, actually, Control.
Of course, Paul Gezzi, Control Technology.
Yeah. And I'd never took a position in them before that. I saw that they'd been beaten up a little bit, which isn't unusual if you're a biotech stock. I mean, you go through the tribes and tribulations of, you know, the length of time that it takes for science to really prove itself, like a mining company. You know, you can't rush the drill bit, and obviously you can't rush the technical analysis of what comes out of the ground too. But you know, summer has probably not been so kind to a lot of those biotech names, but I was really impressed with him, his approach, his strategy, the business model, and I was quite surprised to learn how actually long that business has been around and how long their vision has been around as well. So I really was very impressed with him.
K&R, for everyone who wants all the stocks.
K&R, yeah, and I think they've actually had a little bit of a run. So again, I think they were, you know, a little bit of a victim by a very flat summer, and you know, now that they're starting to, you know, prove their tech and actually get some runs on the board with contracts and things like that, it'll be an exciting time. But you know, like, I really do find that Canada, because it has been an underachiever in the biotech category, you know, for the last, I don't know, George, let's just say 5 to 10 years, probably. Investors are still learning about, you know, the life cycle, the pipelines, how the product pipelines can continue to shift because science hasn't worked, or management have just not hit the mark on one of their products in their pipeline. I mean, these things happen all the time, you know. But you know, I think we're going to have another discussion about biotech, but I'm really buoyant for that space. I like that space, obviously, personally myself too, because it's been a good one for me.
Biotech's never been big in Canada. It just hasn't been.
No.
That's the home of the NASDAQ, but it seems like there's some good biotech companies that have flourished here and then head over to the NASDAQ. So people are starting to realize maybe we should buy these in advance before they graduate to the NASDAQ.
Yeah. And like I said, you know, well, like we were saying earlier, there's certainly been some names that have come off over the last 3 to 6 months, call it what you will, whether it's summer or whether it's just through performance, and they've had to, you know, re-augment their strategy. I think we need to be watching some names closely, and I'm sure we're going to have another discussion about them. But yeah, I'm looking forward to the next couple of quarters, my friend.
Well, welcome back. Glad to have you back. Glad that we're all kind of back in the saddle. I know you never really went away mentally, but we all kind of went away physically and took some time off. And cleared our head a little bit, but great to have you back. And I know we're going to do this every 2 to 3 weeks. There's going to be so much going on. So for everybody watching at home, make sure you keep tuning in when we start talking about more and more specific names as investing season starts to hit its stride.
That's it, mate. Yeah, I'm looking forward to it. And like I said, thanks for having me on. I really appreciate being on your platform, and see you hitting that 10,000 Twitter follower mark, my friend.
Oh, thank you. Yeah, big appreciate that, and all the help that you've given as part of that's been great, because you're a big supporter. And for everybody who's watching, we definitely appreciate that, and more to come, that's for sure. But Leigh, thanks for joining us, buddy, and we'll see you soon.
Thanks, George. Appreciate it.
For everybody at home, you've been watching Leigh Hughes. He's our Beyond the Expert today. If you want to follow him, you can see him right there. You can see his Twitter handle right beside him. Make sure you follow him, because he's got fantastic information, fantastic insight, quite often first to the table. And in the small cap world, that's what you want. That's where you want to be. Thanks for joining us. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great AGORACOM small cap video.